Welcome to my strategy series. In these videos, we look at quick ways to analyze the markets. In this video, we're going to be talking about how to use an inverse level. So the term inversion means the opposite side of the chart. So when you say inverse levels or an inverse trend or anything with the word inverse in it, it just simply means that it's on the other side of the trend. So, for example, an inverse level here would be the hourly inverse. So if you were referring to, hey, this just held an hourly level, and it's going after the hourly inverse, it would be the inverse level or the level of inversion. So we're going to just move this back to here to our 15-minute level. And if we were to mark a 15-minute inverse level, well, it would be one and the same level here. It would be the hourly, and the same price is actually the 15-minute level. The next inverse level would be up here, and then the next one would be here, which is already tested. So this is kind of the untested inverse level of the move on the 15-minute time frame. Now, inverse levels are great because they give you kind of this very clear level to see where shorts can happen. Now, this, of course, is the exact same thing as a hold level on the bottom side because it's just an inverse hold level after all. And inverse just means it's the opposite side. So technically, if you were to say, I'm going to short a target, the inversion to the short would be the long, and then the inversion to the long would be the short. So when we refer to inverse levels, we are just referring to the opposing side. This can be the same thing for trends. It's the same thing for ladder points, inverse ladder point. Well, we're going to go from one ladder point to the inverse ladder point. And I think that's where a smart strategy lies, is whenever you're targeting a level, you should think of what the inverse to that same target is. So, for example, if you were going to buy a ladder point on this side, well, that ladder point has to be strong enough to hold it up. So you're probably going to go to the ladder point on the side that brought it there, and that ladder point would be either from here or here. In my opinion, it's going to be this red one right here for reasons that we talked about in the other videos, but we can't see exactly what it's going to go after until we have a little bit more information on our charts. It would be a little too premature to say that. To say it's going after that level for sure, we're not sure. But moving on, a really good strategy is whatever point you go after, assume that it's going to go after the inverse to that moment. So if you were to go for the ladder point up here, the inversion would have been the ladder point down here. And that's exactly what happens. You have this ladder point collapses. You have this ladders 1, 2, 3, 4, 5 times and goes after the inverse ladder point that brought that move up. So if you take this move back to here, if you were going to go to the very top of the move, well, you'd probably attack the inverse part of that move in the very bottom. Because if you went to the very top, which is right here, well, you're likely going to just go back attack whatever inverse level is here. So if we hit play, you can see it did exactly that, and it attacks the inverse level on the chart. And then if you were to say, well, okay, we're going to go to that inversion up top, and we found that level earlier in this series, then you're going to go down to this inversion point down below. And voila, you do. You go down to the inversion point below. And once you fail this inversion point, it's kind of like hold levels breaking through, and you have one hold level and it trails into another hold level, into a third and a fourth hold level. It builds up this architecture. And once the top pin falls, it's kind of like everything goes below it as well. Once the head pin falls, just like in a bowling arena, then all the other pins behind it usually go too. So it's kind of the same thing. If you've hit the top of a move, you're going to say, hey, let's go to the inversion point on the opposing side. So we can use this for ladder points as to where ladder points go after ladder points, because moments go after their inversion moments. And we can use this for trends. Well, trends compress against each other. So this is also true. So if we have a trend, then hey, it's probably going to go to the inversion trend that is the same trend as it, just on the opposite side of the chart. And then same with the hold levels, from 4 hour to 4 hour to 1 to 1 hour, 15 minute to 15 minute, and so forth. Inversion is awesome because it gives you very clear targets on the opposite side of the chart as what you should go after. We just hit a 15-minute hold level. We've got a trend that we're holding. We've hit the ladder point. Well, we're probably going to go attack all those same great things on the top side. So it gives you great targets for whenever you're in a long, great targets for whenever you're ever in a short, and very clear direction of what the next target's going to be and where we're going next in the charts. So see you on the next one.